Hey everyone, Lawrence here from financialthing.com. Thursday evening peer-to-peer lending live stream. Feeling a little emotionally off today because even this is a peer-to-peer live stream. My Peabody Energy trade did not go very well. So anybody who's watching the stream on Tuesday, that was the big bet for the week, and that has been pretty disastrous. So feeling a little bit off kilter, but you win some, you lose some. Can't bat 100% on the cricket field all the time. Can't always hit those sixes. Is that right? The sixes? It's been a long time since I played cricket, but I hope you are all having a wonderful week and that your investing is going more swimmingly than mine. But that's what happens when you take risks. You can hit some bad ones, and it is what it is. But it's not as bad as it could have been, even though it was bad. I was just looking at the stock price. The trading 212 portfolio is not as bad as I thought it was going to be. But anyway, enough of that. Don't want to dwell on that. Anyway, if you could hit the thumbs up, please. I appreciate that. We're going to be talking peer-to-peer lending tonight. We got some news stuff. Take a look at one of the PropLend's new loans that they are putting out on the platform. And then some of the financials, too, for one of the peer-to-peer lending companies that I was going through today, and just looking at the numbers thinking, some of these companies are running on some thin margins and difficult profitability levels. So what does the future hold for them? We'll see. Let's see who's here, as always, as we always do. Colin Perry, number one today. Colin, well done. In the Peak District. How's the weather? It's very sunny and hot here. I was just talking to my mother in Poole in Dorset, who said it was a little bit cold for her, but the sun is out. Dave Dawson in Staffordshire. Paddy in France. Glory to the Ukraine. Interesting situation over there. Peter Vince in Leatherhead. Paul Bagworth in Kenilworth. John Morgan's in Swindon. Paul New in Stockport. Mark GB. Yeah, Mark said, I just checked that trade. It didn't go well. Onwards and upwards. It bounced a little. Yeah, I tell you, that trade was when I woke up this morning and saw the price of BTU, I had to take a second look. I'll show you right here. This was last night. I thought everything was looking pretty good, and then I wake up this morning and this is what I saw. That was I think it got to a negative 22% at one point, and then it bounced up. Decided to go back towards the toilet bowl and then bounce back up a little bit. So today we're still down about 9%, which is certainly not as bad as 22%, but it certainly stings a little bit. This is just a small position that I had here in the Trading 212 account, which is down 6%. I had a much bigger position in a different account, and definitely taught me a lesson about diversification and not hedging too heavily into any one given asset. Lesson learned. And again, win some, lose some. So I've definitely won some and I've definitely lost some. That's just the way it is when you're an investor. You're not going to win all the time, and I like to be transparent, show you the losses as well as the wins. So that one was a big L. A big L. The crystal ball malfunctioned. I don't know what happened. Apparently there was a lot of rain in Australia, and that caused the coal company to have really crappy profit. So who knew? Cannot change the weather, right? Let's see who else is here. Annabelle, nice to see you in Spain. Rainy in Spain. The rain in Spain falls mainly in the plain, right? Yes, it has recovered fairway from the plunge, but still still not great. Hi from Scotland. If there's any consolation, Mark says my portfolio isn't looking too good. Depends what you're invested in. Colin Perry. It's nice to hear it's sunny in the Peak District. Investors 22 is here in Accrington's finest. Of course, Mr. Aki Chat. Still missing your best friend, Chica Boy. Maybe he will appear one day. Who knows? Yeah, so let's get into some peer-to-peer lending stuff. And we're going to have a read. See what's going on in the news. And then we'll look at some other things. I'm not going to cry. Don't worry. It does hurt to lose money, though. I'm not going to lie. Like, to see just the roller coaster of the highs and the lows with stocks it's really painful sometimes. And it almost feels like the lows are much worse than the highs, right? You don't feel as much pleasure. You feel kind of double the amount of pain from a pretty decent sized loss. Yeah, so I'm not gonna lie, it is painful, but yeah, whatever. It is what it is. I mean, some of the other stocks have done really well. And if we consider this portfolio was at 16,500 this morning, so it's come up another 1,000. And I mean, how can you get mad about seeing things that are going up 55, 37%, 46%? We've taken profits. I mean, look at this Occidental, 109%. So, you know, you have to look at things as a whole, right? This is a long-term investing plan that as a whole has done really well, but you know, those small losses do really sting. Just Us, Mr. Lee Burkett, Mr. Lee Burkett. I'm going to try to get him on the stream. I think it'd be interesting to have a chat. They are launching a new Seeders campaign, crowdfunding to raise equity. They have already raised more than 1.3 million pounds through Crowdcube last year. They've gotten financial backing from the government's Future Fund. This was an interesting comment to me. The most recent equity investment round, the Just Us platform, valued the Just Us platform at £50 million, delivering a 25 times paper return for our early investors. I find that kind of statement to be really misleading because a paper return it's not really a return. I mean, it's like saying, well, I made 100% on a stock, but I didn't sell it, so technically you didn't make a return. A paper return, and how do you sell? Maybe these I don't know if you can sell your Crowdcube shares like you can on Seeders, but 25 times. I don't know if the Just Us is making a profit, so where do they get these valuations from? I'm not a fan of these buying these shares through like Seeders and Crowdcube. Which sounds incredibly risky, but they said the value of the platform is 50 million, and they will continue driving shareholder value up at every opportunity with many exciting announcements. I wonder how profitable Just Us is, if they've made a profit yet. I have to look into their accounts probably next stream. But they're going to be trying to raise some more money. I wonder how much they're trying to raise. It says they're going to list an equity round on Seeders towards the end of the second quarter of this year, and they're also hoping for institutional backing. So I wish them luck, whatever they do. Landlord Invest profits and revenues soared in 2021. This is another reach of a headline. Landlord Invest saw its profits and revenue increase last year, while the platform's chief executive anticipates further growth for 2022. Good. During the 12 months ending the 31st of December 2021, landlord investor profits increased to £67,000, up from a profit of £1,809. It saw its turnover increase by 91.3%. So I guess in relative speaking terms, when you're making a profit of £1,800 for a year, and you make a profit of 67,000, that technically is soaring, right? That's not a lie, even though 67,000 is, for a pretty decent sized peer-to-peer lending company, it's a small amount of profit, but hopefully that continues to go up. I found this comment interesting. We're one of the few peer-to-peer lending companies to ever have a profit, says Philip Karadagi. We're happy with that. So yeah, I think it is good that they turned a profit. Bondora's Go and Grow product reaches 139,000 investors. They have enrolled 139,000 investors in its Go and Grow product, which is basically like an auto lend where they can set their target amount of what they want to receive, generating returns of up to 6.75% per year, using auto features to create a diversified portfolio of investments. This is interesting because it goes to show, I think how much people appreciate auto lend products and how manual investing maybe is losing popularity. Because I think most people are not experienced enough to manually invest in loans unless they're going to pick, many, many, many loans as a diversification play. I don't think your average investor can really identify sometimes which loans are good and which ones are bad. So Auto Invest, I think, is a great product as long as it does what it says. FCA is not anti-innovation, claims Rathi. Nikhil Rathi is the chief executive of the FCA. Said the regulator is not anti-innovation, but is working instead to minimize consumer harm. And then he also says inflation is set to reach a 40-year high this year with energy bills rising much faster than wages. Absolutely true. Our own data shows that over a quarter of UK adults have low financial resilience. And the FCA has been really under attack. I think they've had a really rough time of it as far as sentiment goes over the last year, especially with what happened with the peer-to-peer lending companies that failed, and some people thought they could have done more to really cover them, to make sure that these peer-to-peer companies were legitimate and were doing the right thing operationally. I think the FCA has a really tough time of it because on the one hand, they do want to encourage growth and innovation, but on the other hand, their job is to protect consumers. And what they're seeing happening in these, what they consider higher risk asset classes like peer-to-peer lending and cryptocurrency, is they're having to tighten things down a lot. And that could be seen as anti-innovation or anti-innovation, but I would not like to be the FCA at the moment, trying to do the right thing by consumers, maybe taking things a little bit too far now. So they're kind of going from one extreme to the other, where they were pretty lax at one point and now they're tightening down. Interesting, we've seen second charge lending has increased by 82% in the first quarter. According to the latest statistics from Loan Warehouse, second charge lending was up by 82.62% year on year for the first quarter of 2022. We've seen some peer-to-peer lending companies offering second charge loans. I've always really been a bit of a naysayer of them. And I think what we're seeing is people chasing returns and not necessarily understanding what they're signing themselves up for when they invest in second charge loans. And there's always a saying, it's good until it isn't. I think if second charge people, those loans go into default and you realize that on the second charge you basically have very little chance of getting your money back in most cases, I think those second charge lenders are going to be a little bit gun shy. But it is increasing a lot. Also, another company, Somo's, has seen a 25% rise in second charge lending for the last 12 months as businesses grow post-pandemic. The peer-to-peer lending property, the peer-to-peer property lending platform said its second charge lending now makes up nearly half of its loans. So again, the risk is increasing. Not necessarily the interest isn't. I don't know how much Somo's second charge loans pay, but we're not seeing, 15, 16, 17% generally in second charge loans. Sometimes they're only a couple of percent more than what a first charge loan is. So people are being forced to take higher risk because they, want to chase those returns. Someone says, we want to educate brokers about the potential of second charge lending. The message coming from our network is that they're surprised by the demand and delighted this type of loan can be used for a variety of purposes. And Somo's turnover has risen from 11.32 million to 12.96 million. Be careful out there with second charge loans. Do your research because they can be far, far riskier, than first charge lending. In almost every case, they're much riskier. This is interesting. Peer-to-peer lending companies are urged to improve security amid consumer returns. Out of the peer-to-peer lending companies that I log into, I only see, I think, one that has two-factor authorization, and that's Assets Capital. And I think peer-to-peer tends to be really behind the ball when it comes to security about keeping, especially login security. So I think that this is something that really needs to be addressed. And in this article, it says that security fears are growing, and Experian has urged online lenders and other fintech firms to keep on top of their financial risk controls. But I also think that goes along with web security. I don't think a lot of the websites are particularly good when it comes to their security. I think two-factor nowadays is really a must. I mean, somebody hacks into your account, right? They could literally just sell all your loans off and, withdraw the money. It would be gone. So I'm a big fan of two-factor authorization. I think peer-to-peer lending companies need to do better. Blend Network is working on launching an innovation-only property network of developers. The P2P lending platform and specialist development lender said it's building this network to give property developers funding, information, data, research, mentorship, and an opportunity to build context. At Blend Network, we are building an exclusive invitation-only property network where our developers can access info, blah, 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 unlock funding, and tell us how we can make their life easier. I like that. They're sort of thinking, Blend's thinking outside of the box of becoming more of a network socially within developers, and I think that's really good. These peer-to-peer companies have to do anything they can to get an edge against their competition. I think that's a good one. The platform said lenders can support emerging property developers by using a number of smart data-driven solutions. Estate Guru teases Netherlands expansion. So Estate Guru has opened an office in the UK during the first quarter of 2022, and now they are looking to open in the Netherlands. They've got offices in Yerevan, Armenia, and Berlin, Germany. I was taking a poke, just curious around their financial numbers. Looks like they really want to expand globally. I'm always curious about that, because I wonder about financially. That sounds like an expensive operation. So I went to their website, and the latest annual report I could find was 2020, so this is 2 years old. I was just kind of looking at their profit numbers, Gross profit 2020 was 3,111,000 euros, and their operating profit was 130,783,000 euros in profit. The interesting thing right here, look at this. Administrative expense, 2 million, so 2.5 million euros, and that's why I say it's expensive when you start opening other offices, different countries. You have this high administrative expense that comes along with that. So I always pay attention to things like that when companies are opening up in different countries. Twino has stopped accepting new UK clients. It's the same thing that happened with Mintos, the fresh maker, who also stopped UK people from investing in 2019. Now, Twinos is doing the same thing. They apparently will let you keep your money in there, continuing to earn on the loans that you have, but you cannot open a new account now for Twino, and you cannot add more money, but you can leave your existing investments. I think inevitably what will happen with Twino is they will do what Mintos has done, is probably just close their doors to UK people, period. Because Mintos has been talking about reopening in the UK for a couple of years, and nothing has materialized since 2019. So I think Twino is going to be the same. It is understood that Twino stopped serving new UK customers due to regulatory reasons, including an attempt to manage anti-money laundering risks. Currently, citizens and residents of the EU are allowed to invest in Twino, according to the group's website. Yeah, so at one time I was actually going to invest in Twino because they had pretty good returns, and that was when I was going through my EU peer-to-peer phase. I was doing Bondora, I was doing Mintos, and I thought, well, next will be Twino, but I kind of got a little sour on the EU investing, so I didn't do that. And I still have a little bit of, I think, a couple of €100 in Mintos that are in bad loans now, so it was okay. But no more Twino for UK people. Buy-to-let lending has fallen by 8%. Over the last 4 years, it's fallen by 8%. Is that 8% per year or just 8% total? Last year, the value of residential loans to individuals in BTL sector totaled 36.9 billion, drop of 8%. There you go, from 40.1 billion lent in 2016. So 8% over 5 years. I mean, it's about what, 1.5 a year. It's interesting to look at that because a lot of these peer-to-peer lending companies are doing property lending, so it has fallen a little bit. I think that's going to get higher as interest rates rise, obviously, and things become more expensive. The government's definitely not made it particularly easy for people wanting to get into buy-to-let. I think about 10% of or 11% of total loans in property are for investment loans for buy-to-let. So the government, with the stamp duty and with basically with the stamp duty, has made it pretty challenging for anybody that wants to buy a rental property. And one of the other problems is it's hard to some locations to find anything to buy. I know, kind of experiencing that myself. I was looking for a rental property down in Poole in Dorset, couldn't find anything. Everything was for sale. Everything was sold or had a ridiculous amount of people bidding on them. I think that will cool definitely in the future as interest rates start to go up. Crowd to Fund insists it is still on a path to profitability. Look at this. They have losses over a period of 12 months to April 2021. So April 2020 to 21, they had a loss of £777,000. And their turnover fell to £90,962 from £533,000 the previous year. I would imagine a lot of that has to do with the vid situation. Not really good numbers, but hopefully they will rebound and come forward. I was just kind of taking a look at their website. It's not something I'm super familiar with, Crowd to Fund, but they don't have a terrible default rate, 5.24%. 2.9% written off loans. They've issued quite a lot, 597 loans. There's some investors over here, 40 of them, that have had 100% net loss. That's not fun. But the majority people, 20 to 30% net earnings, pretty high. These people even down here, 0 to 10% net earnings, 10 to 20% net earnings. So some people are making money on credit fund. Target APR and their ISA is 9.84%. It's pretty good. So, but those numbers don't, those numbers when turnover is falling to 90,000, you got to ask, well, how many loans are there on there? And is the company healthy? Millions of young people are taking financial advice from influencers. Now, first when I read this, I thought, oh, that's not good. People are taking their advice from YouTubers like me. But then, what is really good about this, these statistics, it was a communications consultancy, MRN, in partnerships with the Mouthy Money, has revealed that 62% of 18 to 29-year-olds follow financial influencers, with 74% trusting their financial advice. That is crazy high. But good. As a result, 9 in 10 young followers have been encouraged to change their financial behavior. I think that's awesome. 40% of young people have cut their spending. 38% have invested in a variety of assets. 32% have used buy now, pay later schemes. I don't think that's necessarily a good thing. 29% have started budgeting, and a quarter have paid off debts. So, these influencers telling young people to do these things that are good for their financial lives. 57% of 18 to 29-year-olds currently invest, and over half of those started during the pandemic after the first lockdown was introduced. 30% learned about cryptocurrency from social media, and 33% from friends and family. 52% consider cryptocurrency a good investment, but only 11% invest in it, compared with shares, 24%, and funds, 24%. So, really positive that people are taking their advice from these people, but hopefully in a smart way. Hopefully nobody dumped a bunch of money into BTU after listening to my trade information on Tuesday, because that wouldn't be a good thing. But some positive things out of that report. Monthly market pulse. This is Blend Network. I like this market pulse that they put out every month. This is April 2022, and it has really good financial information in here if you follow this kind of stuff like I do. U.S. annual consumer pricing inflation jumped to 8.5% in March, up from 7.9% in February. This is crazy. German annual producer price inflation, that's the PPI. It's different from the consumer, so that's the production side. Top 30%, so things are getting more expensive to manufacture. In the UK, inflation hit a 30-year high of 7% in March. The market is now expecting the Bank of England to raise rates again in May. Again, that will affect peer-to-peer lending in many ways. It will be the first quadruple back-to-back interest rate hikes in 25 years. Inflation hit a 30-year high of 7% in March, up from 6.2% in February. I think that will continue to stay high, or if not go higher. And in property, according to Nationwide, Q1 of 2022 saw the largest increase in house prices since Q4 of 2004, with a whopping 15.3% annual growth in average house prices. Wales remained the strongest. Imagine that, Wales. I mean, Wales never really gets any recognition for anything, so good on Wales. So they got the strongest performing region in Q1, while London remained the weakest with just 7.4% year-on-year growth. That's crazy. I mean, 15% increase in property prices. It's just making it more difficult for people to get on the ladder, especially if you're young. Rightmove expects the second half of the year to be slower and a more evenly balanced market, although demand will still outstrip supply. Good report. PropLend. So I got an email saying this loan here was coming up. Pretty heavy amount, 2.6 million for 24-month loan term, 75% loan to value. These LTVs, they get a little bit high, even though you can take these lower tranches. If you want to do higher risk for more interest, 10%, you can take that 66 to 75% loan to value, or you can do these lower tranches for lower risk. Depends what your risk appetite is. Down here at 6%. The loan of 1.7 million. You could take, a smart thing to do maybe to do sort of an investment pyramid where you take a smaller amount of the higher risk, medium amount in the B tranche, and then that base amount maybe more in the lower tranche in the A. That you could do a ladder like that. That would make some sense. I just get a little gun shy about these valuations because how accurate are they? I don't know. I mean, I presume PropLend does a good job with their valuations, but 75% loan to value on a warehouse, it's high. So that would equivalently mean that maybe 10% interest on a C tranche is pretty high risk. But there is somebody tenanted in there. It doesn't look like the nicest warehouse in the world, but 10% interest, you can't be too upset at that. There's a first legal charge on the subject property, a debenture, a 6th-month interest reserve, joint and several guarantees limited to the sum of £500,000. Don't know that necessarily is much security at all, but it's always good to get a guarantee on these securities if you can. That's 11,000 square feet used by the borrower for their catering business. So yeah, I thought it was an interesting loan. See what else they have upcoming. I guess it's coming out soon that they put it up there on the email. See what else they have. Loans. Nothing funding live at the moment. Pending. When is it coming out? Yeah, so they got a few things up here. This is a better loan to value, 27% on this Chelsea public house. It really is all about valuations. And, one thing that I've learned is these people doing these RICS valuations now are very, very careful about what they tell you and what they report. As I think it's become more of a problem about these valuation companies getting it wrong and then somebody coming back and suing them. I know because I tried to get a valuation done recently on a commercial property, and it was challenging. I mean, it was almost like the guy wanted to give me some really low valuation just to cover himself. So I understand what these P2P companies go through when they're trying to get accurate valuation numbers. Let's take a quick look at LoanPad. See what's going on in their platform. You zoom in. 146 loans. I think it was exactly the same number as the last time we looked at it. It looks like it hasn't moved at all. 43% loan to value. Yeah, this just hasn't changed. £406,000 average loan size, and average time to invest and estimated time to sell less than a day. 9 lending partners, nothing in the ICF. So not really any forward movement in LoanPad, just steady as she goes. And let's have a look at the live loans. There's definitely a lot of extensions in here. This one here is the same one. Extended, extended, extended. I think there's one default. Yeah, right here. Default, no suspension, no ICF. £345,000 loan. Nothing too concerning, I don't think. Let's have a look at it. This is the one that's in default. And they have such low loan to value rates on these loans. It's not even concerning me. 50% open market value, 54% on a 90-day open market value. So nothing really to worry about. Just more extensions. Pretty normal in property development. So I don't see anything untoward on this loan book so far. See what else. Oh, I have to take a look at the portfolio real quick. Come on, Peabody. You can just claw your way. All we need to do is claw our way back to this dotted line. I don't think it's going to happen today. I almost thought about buying some options down here when it was tanking. Down here at minus 17. Oh, no, I think it was minus 22%. I just couldn't bring myself to do it. I did not have the cojones to go for options down here when it was at 22. Couldn't do it. I couldn't do it. It was too hard. It was too hard at that point. I almost dumped I actually sold off some of my other position in this. What should I have? I think I sold like 10% off when it was at minus 15%, just to lighten the load. Glad that did not go anymore. Glad I didn't sell any more off, because that would have been, again, timing mistakes are so crucial. And that was a timing mistake that cost several £100, because you're selling out at minus 15%. Now it's rebounded. I think I sold down here a portion, and then it came back all the way. So again, sit on your hands. It's the best way, unless you know something that other people don't know. Sit on your hands, I think, is the best thing to do, because I always make mistakes when I make rash decisions. Anyway, that's what it is, you know. I mean, can't get it right all the time. I hope you can. I hope you get it right all the time. I hope you knock it out the park, get 100% wins. I don't know. I don't. Any idea why BTU missed? Yeah, labor shortages and heavy rains in Australia is what they said. So, Peter Clark is here in Buckton near St. Neots. Where is that? Now I'm very interested. Where is Buckton? I always like to know where you got. In Cambridgeshire. Wow, this looks like a little village. Some, nice. It's very green. Just south of Peterborough, my neck of the woods, when I was growing up. Pretty cool. Welcome to the stream, Peter. Nice to see you. What lesson have you learned so we can take something from it? Don't go too heavy into a stock trade. You know, I usually have this rule. I don't put in more than 5% onto any stock that I hold. That one I went over. I think I went to 10. So yeah, that was a lesson learned. Don't go too heavy. Don't get too greedy. Hit that thumbs up if you can, by the way, if you're enjoying the content. I definitely appreciate you. And thank you for all the support from the Patreon members. And love you for that. Yeah, but what lesson? I mean, diversify. Don't go too heavy into any one stock. Yes, the rewards can be big, but the downside can also be big. So do your research. Some things are just out of control. You know, weather, you cannot control the weather. Labor shortages, should have known about that. Didn't, but it's kind of an obvious anyway. Lots of things learned. And if you're an amateur investor, learn just to stick with index trackers and don't do what I did. Mike Powell, I've got some polymetal down 82% for obvious reasons. Ouch. That's a tough one. Hopefully you don't have too much in it. Brian from Woburn is here signing in. Patty is a big LoanPad fan, only 4%, but it's the safest P2P investment. In my view, absolutely. Invest 22, you're in Peabody too. I know how you feel. Were you in Peabody before I mentioned it? I hope that you knew what you were doing. Never had any issues with LoanPad, Paul. You're good. I like LoanPad. Hi, Alan Brooks. Nice to see you. Mike says the just us valuation is nonsense. Essex Capital raised at 60 million, crowd property at 30, and they are part of the big three now. Agreed. I agree. John Morgan says, I don't like the 60-day notice in case something goes texts up. Did you mean tits up? Am I allowed to say that? Crowd property had another loan in receivership today. Okay. It's going to happen. I mean, I don't know how many total. We'll look at them next week. We'll take a look at some of their loans. Yeah, look, I expect loans going over to be just a normal part of what we deal with. It's real estate development. If you've ever done a property, yeah, like a renovation, or they never go on time, or a build, they never go on time. I've done a few in my lifetime, and they are never. We're always over. We always go over every single time. Every time. I don't think there's one time where things have been finished before they were supposed to. Yeah, and also you're going to get more bank interest now. I got another email from Ford Money saying it's gone up to 1% still. I mean, it's not very good, but you will get a little bit more in your savings account. Property market is mad. It's now offers over. Got to be a bubble, mind you. Having said that, for a while, I think interest rates spike. A lot of people will be in trouble. Yeah, the difference is, you know, when we had this problem in 2009 was there wasn't a lack of inventory, and right now it's an inventory problem. Like, you know, we're having supply issues with building materials, can't get the labor, can't build the houses fast enough, so things are a little bit different, but I think interest rates are definitely going to put a hurt on people, for sure. Prices are high. You know, here where I am, a real estate brokerage that I know, they put a house up for sale. In 2 days, they got 48 offers. It was in the $325,000 range. They had 48 offers. and offers us, I think, with 20% over asking price, some of the highest ones. So it's a crazy market. Crazy. Yeah, if you're a landlord, by the way, one of the best tips I ever learned was looking inside of people's cars. If the car is clean inside, generally, not always, but generally, they'll keep their houses clean. So there you go. Free tip of the day from me to you. Mark is hoping for a housing crash. I don't know. With the inventory levels, I'm not sure you'll get a crash. You might get a correction. Norman P. Anyone into invest and fund? Lawrence was going to do something on REITs. Okay, Tuesday I'll do something on REITs. I totally forgot. Let me get a pen. I'll put it on my list. Do REITs, real estate investment trusts. We'll talk about those on Tuesday. As an investment. I'm just off kilter today. I've forgotten about everything. How long have we been going? 52. We're going to be under an hour tonight. This is maybe a first. You suffered a £4,000 loss on BTU. Did you sell it? If you, I would. I mean, I'm planning on holding most of mine. I think this might just be a short-term shock. You only lose if you sell. So. Loan pad is about 23% extended. The default property has been sold at auction at the beginning of the month, sold below valuation, but sufficient to cover loan. Perfect example of how these valuations cannot always be accurate. But because loan pads LTVs are so low, they usually are not going to have a problem covering. Loss of £2,000 on BTU. I thought it was 4,000. Is it going up? No, I wasn't gambling on a hunch, Dave, about BTU. It was a lot of research had been done. But I think you're right about the stop loss. And I actually was thinking about doing that. It's funny you mentioned that because I was going to put a stop loss on, when was it? I think it was the night before. I just forgot to do it. I did. That was it. You still rate loan pad pretty highly? Yes, I do. Very much so. Yeah, I wish I had put that stop loss down. I had so much going on this week. It's been crazy, and I just forgot to do it. It's crazy. I should have done it. And that's another lesson learned. Put a stop loss limit. But however, I will say this. BTU I was planning on holding longer term anyways. It wasn't. I thought, at the beginning I was going to just drop it at the end of earnings and then decided, no, I'm going to hold it because I think coal is just going to do really well. So maybe that's why. But the stop loss would have been really smart, at least on a portion of the trade. Any thoughts on assets exchange? This seems to be different from most peer-to-peers. I like them. Yeah, I don't invest in assets exchange myself because I just lost all my money in BTU. But no, I'm just kidding. I do like what Peter Reed is doing over there. I think he's onto a good product. So I'd give it a go if I had extra cash sitting around. Yeah, people like Unbolted have been fantastic. I can't get enough in there. I like Unbolted because they stick to what they know. They really haven't veered off their track of what they know how to do. So steady as she goes on Unbolted. I'd probably up my investment through Unbolted too if I had more cash. Just my general strategy at the moment with peer-to-peer has been keep it where it is. I've not been plowing more money into it, just letting the investments kind of earn interest and roll in, and that's really it. So okay, we're at 56 minutes, so let's get out of here. I'm going to let you go. I don't think I have anything else. Have a great weekend and enjoy. Hopefully go out and do something in the nice British weather. Hopefully it's not raining, and have a good time with your family and your friends. Don't take this money stuff too seriously. I know we talk all the time about investing, but a couple of people I know have been diagnosed with some pretty nasty health issues recently, and it does ground you and make you think. Don't take life too seriously. It's not all about money. Sure, money makes life easier, but it's not the be-all and end-all in life. So anyway, hope you have a great weekend. We'll be back on Tuesday, all being well. Unless something pops up, I'll send out an email notification. Please hit that thumbs up. Subscribe to the channel if you're not subscribed. I know most of you are. Join the Facebook group. Become a Patreon member if you feel so inclined to do so. You can join the YouTube membership. You'll become a member. Show your support. And that's it. I'll see you next time. I'll be putting up a new motorcycle video up this weekend too. And it's kind of a look back to right before the BTU trade and me sharing about the emotional ups and downs of investing. So check it out. It'll be up this weekend. Anyway, take care. See you next time. Bye.